By 2030, we want every person to have access to water and sanitation services for life. To deliver a service, maintain and extend it to more people, water and sanitation companies require continuous investments. Let's look into the current approach to financing infrastructure. If a water company wants to finance its infrastructure expansion, it would normally approach a government for a grant or apply for a loan from a commercial bank. There are challenges to this approach. For investors, investing in a water company has risks. What if a water company is not able to pay its debt? For the water company, funding requests may not be awarded by government if it has a limited budget. If loans are given, the repayment period is mostly very short, often less than 10 years. And interest rates are high, often well above 15%. All water companies in a country deal with the same challenges, in effect, creating competition among them for scarce resources. In short, the standard approach of financing is not sufficient and not appropriate for long-term financing needs of water companies and not leading to the vision for 2030. What if there were a water financing facility? A water financing facility pulls together investment projects from a number of water companies. It mobilizes capital, not for each separate company, but for the total value of all projects in the pool. It may also set up a reserve fund. A water financing facility, as an intermediary between investors and water companies, creates security. The risk of investors reduces. They do not deal with one company only anymore, but they deal with the water financing facility. The new approach makes it possible for long-term investors like insurance companies or pension funds to step in. New ways of financing emerge. Bonds can be sold by the water financing facility to long-term investors. With equity financing, investors become shareholders in the water financing facility. The investors can also then get a return on investment based on the success of the facility itself. Loans become available to water companies with lower interest rates and longer payback periods, making it easier for water companies to pay their debts and for investors to get their investment back. For this approach to work, several conditions need to be met. Government support, legislation, a domestic bond market, and water companies with bankable projects need to be in place. Water financing facilities can be one of the pieces in the puzzle. They can provide water companies with access to finance for continuous investments, so they can extend service to more people and ensure adequate maintenance of systems already in place.